highest conviction call for 2024 is a bit of a thematic one.
I think the highest conviction bet is probably the most important one for the whole market.
We're going to make a very non-consensus position.
I know you asked me to think about this, and I've been feeling very guilty because I can't come up with something which is really super optimistic.
This is a tough one. I think I'm going to go with the switch from...
Well, my highest conviction prediction for 24 is the same as it was for 23.
Everyone's slamming lithium, saying the party's over.
I actually thought long and hard about this. You want something that is basically volatile, has the ability to be volatile, and you want something that's been kind of in the toilet, so to speak, in the last 12 months. So the one I picked...
Right, buddy board, it's last bloody two. We're nearly there. We're just lunch beers for the bloody shit. JD, keeping healthy, good stuff, mate. Right, this is a bloody exciting episode. We've got, I would say, there was 9 people, but 8 companies, 8 of the biggest and best funds in Australia. And we even went international as well, given some big... Yeah, we did, didn't we, JD?
We did, mate.
Don't you worry about me, Cobby. You just sit there and enjoy the show. Right, we asked 4 questions about what we're looking for in 2024.
Yeah, so we asked for the most highest conviction prediction, and then we had second question for all the fundies was what's your most non-consensus prediction, and then
best performing commodity.
Best commodity, shittest commodity.
Yeah. Really insightful, I reckon. I got heaps out of it, and you just get a snapshot into thinking how are the resources and mining fundies thinking thematically about the year to come.
Yeah, and mate, you went through who they are at the start of the video. We won't rattle them off.
Some fan favourites in there.
Bloody fan favourites, all true friends of the show. So
friends of the
pumped
show.
up for this one. Thanks for everyone getting involved.
Maddie, I've got a bit of a gripe at the moment.
Righto, Trav, we've got a big episode to get to, so let's get into it, eh?
I'll tell you my gripe. My gripe is seeing, I understand equity markets are tough, right? But I've been observing all of these capital raisings, and they've all got these insanely dilutive attaching options associated with them. And you think, fuck, did you have to do like something that dilutive and punitive to your existing shareholders in order to get that capital raise done?
Oh, and then giving out the underwriting, sub-underwriting, the bloody rights issues, and giving out oppies to the bloody people who bid into the subs, just giving it away.
I get the capital markets are tight, and I mean probably the toughest I've seen them in my career. But geez, it's rough. I wish there was a better way, mate.
Shareholders are out there; they're not feeling adequately informed by the management. They're not feeling they're here, companies here, no connection.
Well, no love. That makes sense to me, right? If you had better engagement with your retail shareholders, you wouldn't have to do these stupidly dilutive equity raises. You'd get them over the line because you've got better engagement and they're there for it on less dilutive terms. But what we see at the moment is not that.
And we speak about it all the time, guys. The shareholders, they are the owners of the business. Management, they're running the show. So you want perfect communication between the two parties.
There is a solution to that too.
Mm-hmm. Yep.
Mate, something we believe in as a company, and that's why we've got involved, the InvestorHub. Mm-hmm. Love it.
Absolutely. It gives the, MDs good access to their shareholders. Shareholders, you can ask them questions. You can see, more presentations, you get more FaceTime, all these sorts of things. You got better contact. The company has a better gauge on their shareholders. They get better data. They can communicate them with them far more directly, which, gets the outcome that we, and the companies really want. They want shareholders on their side, understanding what they're trying to do to take the company in the right direction.
And I think the shareholders you get access to, MDs won't have to necessarily go to a conference to talk to people. You go through the InvestorHub. Best way to keep a professional line of contact between the MDs, CEOs and the shareholders instead of angry hot copper forums. The shareholders can post questions on the announcements, go straight to management. They can either choose to air them or not.
The tools literally
brilliant.
Yeah, the tools exist to have literally way better relationship with your shareholders, have them more engaged, updated. You should want that. And I reckon it makes sense to kick off 2024, on a fresh page. And
2023's been a tough year, Trav.
Yeah.
I think companies have got to look at how we're going to differentiate in 2024, and this is an example of how you could do it.
No,
It's
it
not
gives your
going to
retail
make your
guys.
drill holes better, but
No, no, it gives all your retail guys and gals the top 20 experience, but it gives management the capacity and the time to actually do that in the best way that they can.
Get in touch with Rhori.
Rory,
InvestorHub.
his email's in the show notes, Rory at InvestorHub. He'd love an email from you.
Yep.
We even got an example of a company that we've noticed that is utilising InvestorHub and took appropriate action and put the Money of Mine Daily Show link in there. That is taking it to a great level. We
Love that.
Tell you what, talk about engaging with
Way to get publicity.
the audience. But I'll show a demo here. You go into an announcement. They can attach a video that's straight from the MD. So this one was for Blackstone's acquisition. The MD does a big speech on the prezzo. Then you've got a line that you can chuck a comment in there. They've also got their rights issue within their Investor Hub, so investors can actually go straight through the Investor Hub to apply for their entitlements. So they don't have to just makes it's all in one spot. Don't have to then go via Automic or whatever to do it. So it's a pretty holistic approach to investing.
Shareholders can ask questions on that announcement, like what more of a pure way to actually get answers. So I love it.
Hit 'em up.
Get in touch with InvestorHub.
Beautiful. Righto, let's get into Fundies predictions for 2024. Here we go.
Rick and Karina, thank you very much for joining us. What is your highest conviction prediction for 2024? Geez, that rhymes.
Our highest conviction is actually a stock. It's Meteoric Resources. We like it for two reasons. The first reason is Meteoric's a rare earth explorer with a fantastic project in Brazil, in South America. And the rare earth price has really been in the toilet for most of this year and a fair bit of last year. So if you get a small inflection up in the price, the market will really start to focus in on the sector. And Meteoric have got what we think is a geological freak in terms of the style of deposit they have. And it's got a real advantage over its contenders in that it's something that can be put into production quickly at a reasonably low capex, certainly compared to many of the peers that are $1 billion plus capex. So that's a stock that we particularly like.
Beautiful. Second question, what is your most non-consensus prediction for 2024?
All right. Well, our consensus prediction for 24 is that you're going to see the explorers be more supported by the capital markets.
Ooh.
The producers have been well supported in 2023, but given that the ongoing inflation and higher interest rates, we actually think that they're going to struggle to outperform in 24. And we think you're going to get the best returns is going to be out of the explorers. Normally the markets go from producers to, say, developers and then down to the explorers, but the market has been deprived of capital now for over 18 months. And so there are actually very few developers to invest in. So if anyone's looking to get out of the producers and cycle down into a less developed company, they're going to have to go into explorers.
I like it. Yeah, that is certainly non-consensus. You don't hear too many people saying that one. So yeah, bold prediction. I like it. And what about what's the best commodity for 2024? Best performing commodity?
Yeah, we generally don't take strong views on commodities, but one commodity we do like is uranium. That certainly the recent announcement that the Americans are going to ban a lot of the processed uranium out of Russia and less friendly countries is really focusing the spotlight on the commodity and on companies that have uranium projects in first world jurisdictions or jurisdictions that are friendly to the US. So we just think that's really going to fan it. And in terms of the dialogue socially within the community, that I think it's starting to become a little bit more acceptable to mainstream people in the world. And if that shift continues, you'll see growing momentum in the sector. So that's certainly the commodity that we think has got a potential for very strong upside.
Beautiful, I like it. And last question, guys, what is, on the flip side of that, the worst performing commodity for 2024?
We're going to make a very non-consensus position that iron ore is going to be the poor performer of 2024. If you're starting to face into perhaps some lower GDP growth, lower economic growth globally, we think iron ore is the one that's going to suffer the most.
Very, yeah. Again,
I like it, yeah.
non-consensus. I like it.
Enjoy your Christmas period and all, guys.
Yeah.
Have a good one.
Let us know when you're in Perth next.
See you later.
Yeah, we'll do.
They look professional.
Mr. Russell Delroy, thanks for bloody contributing to our fundy segment predictions for 2024. You're
Gentlemen,
not short of a crystal ball prediction, mate. Predicting metals markets bifurcate. I want to know what's next for your predictions. So, mate, what's your highest conviction prediction for 2024? It can be thematic, stock specific, or otherwise.
Yeah, cool. I did cheat. I've pre-prepared some notes here. Full disclosure. So, look, in line with some of our prior conversations, I think my highest conviction call for 2024 is a bit of a thematic one. And really it's around a confidence that the EU and the US will react quite violently to significant sort of uncompetitiveness of their auto industry versus Chinese EVs. That I genuinely believe in for next year. I think we're going to see protectionism, subsidisation measures both ratcheted up, so call it carrot and stick. And I think it is going to have to be pretty substantive. The level of differential on the equivalent vehicle pricing is big, and there's an argument that China subsidises in a range of other ways throughout the value chain. So, yeah, I have a high conviction call around EU and US reacting violently, and hopefully, maybe less conviction around this, but hopefully the market finally paying attention to the very limited pool of, decent domestic assets within the EU and the US that they need to see progress to production. So particularly the EU, it's an incredibly small pool of talent. So, yeah, that's my call for 24.
Rusty, I'm fighting every urge to ask a follow-up question, but we're trying to cap these ones at 5. So next question is your most non-consensus prediction for 2024.
Probably the one that I just rattled off. I don't know how many other guys believe in that. Probably not too many. No, I aside from that, I would say maybe uranium stocks to pull back as a controversial one. Implied U price in many of these market caps. I think you guys have perhaps touched on this with Sammy Berridge previously. If you do a count back on the implicit uranium price in some of these uranium stocks or hopeful producers, I think those stocks really should come back to more sensible trading levels in 2024. I think that's very much against consensus. And having said that, we are still very constructive around uranium, but as value guys find it really challenging to go and own a stock that implies, $130 a pound when the physical's at 81. So, yeah, that's our non-consensus call.
I like it. What about the best performing commodity for 2024, Rusty?
Now, just so we're clear, you're never going to resurface this. Like, I'm not going to look at this in a year's time and get shit for it, am I?
Right, we produce like 200 shows a year. We're going to forget this.
Good. There's so little upside in these things. Best performing commodity. All right. I don't think it'll come as a big surprise. Oil is our call. Look, when you look at these things, it's as of today, what is it, the 12th of December. So whenever you make a call, it's relative to the spot price as at today. I think that's really important because you're then looking at that spot price in the context of cost curves, incentive pricing, demand growth, supply constraints, etc. But it is relative to the spot price. That's the key to the view. Oil at US $71 a barrel today. It could easily be up 50%. I don't think it's out of the question to see oil at 100, 105 a barrel, at some time during next year. Does it finish exactly there, exactly the end of next year? I don't know, but certainly, our highest conviction relative to the spot pricing today would be around oil at the moment, and that's certainly reflected in the shape of our portfolio with a lot of the particularly really mega cap oil companies out of Europe trading at incredibly compelling valuations on
if you're that bullish,
any
Rusty,
metric.
why wouldn't you just bloody buy, WTI call options at 105 strike 31 December 2024?
Yeah, I know. You could. It's not a silly idea. I haven't quoted them up. You might be more familiar with whatever.
I want to look at it now.
Same. Whatever the vol calc is there and the like. Look, I haven't quoted it up. I just think it's very hard to walk past the super majors out of Europe. You can go buy BP, one of the world's biggest oil and gas companies, and with a really substantial renewables business embedded in it, on like 10 to 15% free cash flow. You got a 5-6% dividend yield. The same again in buybacks. Like, very low gearing. A lot of the gearing that they do have, they locked in at really low rates when the environment was such. They've now got that cash sitting on account at a multiple of what they're paying to borrow it at. So, the treasury in itself is sort of a net interest margin business division, which is incredible. And, I just don't think it's very often that you get companies of that size on sale. And for whatever reason, within the EU in particular, they trade at radical discounts relative to US peers. I think Goldman's put out a piece a week or two ago articulating a 45% discount to equivalent US peers. That's nearly half price. I suspect, and there's a bit of guesswork in it, but I suspect that's really because European investors are more ESG driven, with a view around decarb and not owning these things. And as we've discussed, guys, I'm certainly a believer in decarb. A lot of positions that we've had in the portfolio over a long period of time supports that. But at the same time, there is a pragmatic reality to the here and now, and we still need lots of oil just to shift all the goods and services around that we require for everyday life.
Love it, Rusty. And last but not least, worst performing commodity for the next year.
Cool. All relative to spot again. So I will just reiterate that one. Cost curve, I think, is a place you sort of go looking at things when you're looking at perhaps a commodity you think might come back a bit. I couldn't help but land on a pretty obvious one that I think lots of people have called and been super wrong on, but fuck it, I'm going to land there as well. Iron ore. So what are we today? I think $137 a ton US. I'm going to say that that could come back a fair way, and there's still plenty of margin for a lot of the supply side. So, elasticity in supply, I think there is elasticity in iron ore. I think in met coal it's a bit different. You could argue the same thing for met coal about it trading above and beyond incentive price of the cost curve. However, I think due to those sort of ESG constraints and access to capital, it's far less elastic. It's far harder to bring on that response. And I think if you look in iron ore, S&P have it as the only commodity in 2024 forecast to increase capital outlay. So, that says a bit too. That tells you that there is a supply response perhaps on the horizon.
Beautiful. That's one that caught out a few people over the past year, so keen to see how it plays out over 24.
Yeah, I'll be dead honest. I probably would have been wrong on this many years in a row. If you'd asked me the question previously, who knows? But look, again, it's all relative to spot. So it's very specific to the question today. And, at 137 US, fuck, I couldn't. Yeah, it was hard to walk past iron ore. It was a bit of an easy one to pick, but hopefully.
Well, you're the
hopefully
second
I'm
of two
in the
fundies that we've
ballpark.
spoken to that has picked Dinar. So, yeah, mate, bloody appreciate
Cool.
Appreciate it, Rusty.
Yeah, awesome, boys. If I don't see you before the break, have a ripper Christmas.
Wicked, mate. You too have an awesome Chrissy and New Year's.
Okay, next cab off the rank, Johnny Forwood, Lowell Resources Fund. Mate, bloody bit of a Victorian feel, boys. Johnny, question number one, Cobber. What's your biggest highest conviction bet for 2024?
Look, I think the highest conviction bet is probably the most important one for the whole market, and that is that I think that we're going to see moderating inflation in 24, and that will affect pretty much everything. Firstly, it'll affect US interest rates, and then it'll affect gold, and it'll affect junior resources stocks. Most particularly, which is the subject closest to my heart. So, and it'll affect them in a positive way. So, looking for a good 24 on the back of that moderating inflation.
So positive moderation of inflation we're picking up.
Exactly.
Love a good macro pick, John. Next question is, what is your most non-consensus prediction for the upcoming year?
Non-consensus or not, but because a few people might be saying this, but I think lithium has been pounded so hard this year in terms of commodity price. And we know it is a volatile commodity. We know that the Chinese are prone to their inventories down very low. So I'm picking a strong rebound in the lithium prices next year.
Roger that.
Beautiful. And what about the best performing commodity for 2024, John?
Other than lithium?
I'm going to go with something that's a little bit non-mainstream, if you like, particularly here in Australia, and that's platinum.
Yep.
Yep.
South Africa dominates that market. Demand has bounced back strongly in 2023, and we're forecasting. Well, the Industry Institute, the WPIC, is forecasting big deficit this year, 1 million ounces this year, a slightly smaller deficit next year. But I think the macro for platinum, South Africa dominates the market, and the macro is for closure of mines and shafts in South Africa over the short to long term. So, yeah, I think that's my pick for 24.
Any correlation to palladium? How your platinum prediction or not?
I think there is a pretty strong correlation. What has completely broken down in the last decade or so is the relationship to gold. Platinum, palladium, used to have a reasonable relationship to gold, and platinum used to trade at a premium to gold. Now it's been well at a discount to gold. We may see it bouncing back towards $2,000 an ounce. Who knows?
Beautiful. And last but not least,
the biggest duster commodity for 2024.
Look, I'm just going to go with a guy who I really respect and have followed for a long time, who's probably one of the best analysts on the nickel market, but also his comments on the cobalt market. I've never heard someone trash a market quite as badly as Jim Lennon from Macquarie has trashed the cobalt market. He said it's the worst market he's ever seen in terms of oversupply. So, look, I think cobalt, that's got to be bottom of the barrel, for 24.
I thought you were saying he was going to be the biggest duster. Very good, Johnny. Thank you, mate, and Merry Christmas to all the yourself and Richie and the team at Lowell Resource Fund, mate. Thanks, Ed, for making the time.
Appreciate it. Thank you for having me on, and Merry Christmas to the Money of Mine team. Thanks for listening to me this year.
Oh, mate, it feels like we've interacted in a way recently.
It does feel that way. It feels like you sent me a video.
Oh, mate.
G'day, Hedley. Thank you very much for joining us, mate. Let us know what is your highest conviction prediction for 2024?
It's got a good rhyme to it, that.
It does.
So thanks for inviting me in for a quick chat about it. I really appreciate that, Trav and Maddie. And look, I know you asked me to think about this, and I've been feeling very guilty because I can't come up with something which is really super optimistic. But my highest conviction, I suppose, thematic prediction for 2024 is that, this stock interest that we see around lithiums, particularly in Western Australia, which has been propped up by some speculative buying led by billionaires, I can't see that being maintained. But, the liquidity which has followed on behind that, I think, falls away. So it's been one of the shining lights of liquidity, enabling people to raise money in a large part of the market. And I see tremendous risk around that. So I think 2024 is the year that lithium comes to a reckoning in WA.
Oh,
I'm
mate,
sure
I predicted it as well, Headers. That was my bloody one at the pub the other night. I was after the Wildcat results and the decline. I'm like, I think this is the end of WA lithium mania for the moment. And I think I was right.
It'll be back. But, that industry it's had huge margins in the producers. They're unnatural. And there's a lot of production which will come from WA as well as from overseas. So I think that needs to come to a reckoning. But that's all been propped up by Gina and Chris Ellison, prepared to pay over bid prices. It's amazing. So, we'll see what happens with that. But that's I couldn't be more sure of something.
Well, mate,
probably live to regret that part. Yeah.
No, it's all right. You only got a shitload of other fundies to compare to in this episode, so there's going to be a ratio of ones that look good and look bad, mate. This is the trade secret that I wonder if I'm surprised people are giving away. The most non-consensus bet you've got for 2024.
Okay, so I've been thinking about this, and I've been thinking, how far out on a limb am I going with what I think is going to happen in 2024. And I have to say, I'm not entirely sure what consensus is. So we might have to come back to this one and redo it.
I guess consensus right now. Yeah.
Yeah. So I went around West Perth 2 weeks ago and I was getting told that gold's going, it's starting to move, the brokers like it, there's liquidity coming into the space there. We've seen a couple of raisins get away for that. So I'm going to say my non-consensus call is that return of liquidity and those green shoots that we're seeing won't happen. It's not going to germinate. In fact, I think that through next year we'll see things like it'll be difficult to spend on exploration. The meters that are drilled will fall away, and that sentiment feeling towards the sector is going to get worse. Maybe what I'm expressing there is this is extremely what people want to hear, and it's definitely not what they're hoping for. So if consensus is defined, and it often is in West Perth, and particularly when brokers are involved, around what people really, really want and what they're hoping for, then I think I'm a long way from it. But
what's really interesting, Hedley? Both you and the Karina and Rick at Acorn have responded to this question in opposite ways. So you've both bet on juniors and liquidity in the equity markets, and you've both taken the opposite view. So I'm not sure what consensus is.
Mate, you'll have to put a carton on that between yourself and Acorn.
And Hedley, what about the best performing commodity for 2024?
Well, I've been reading through the last week or so. I've been sort of trying to form my views around this, and I've been looking through, what have they all done this year? What do I think their fundamentals look like? And I think the broad fundamental for Chinese economic growth is not going to grow as fast as people were expecting. So, on that basis, demand for commodities generally is a bit tough. If you've been in orange juice this year, I think it's been a really good year, but you don't dig that up, do you? So, I'm looking at gold as being probably the most robust commodity across the board, but that's against a weak field. And I think what we would see in gold is going to be flurries. There's going to be volatility, and I think it's going to be this ebb and flow of sentiment around interest rates are going to go up a bit, interest rates are going to come down a bit, and then broken expectations when inflation prints come in a little bit higher than people think they were hoping they were going to be, and then the expectation for interest rates fluctuating around that. So I think at the moment, gold is testing new highs. I think we'll see it test 2,100 again in US dollar terms. I don't see it going through $2,500. So, I think it's probably within that range. There's probably a bit of emotion involved every time it breaks through something that's got 2 zeros on the end. So, maybe 2,200, 2,300 through the course of next year. And as I said, that's probably going to be off the back of in a week leading up to an inflation print in the US.
What about the biggest duster of a commodity next year, Headers? And that could probably include ones that are currently dusters.
Well, I've got two which I think are at most risk, and they're the ones which have probably had the best 12 months so far in the mineral space. I mean, I don't see a great deal of positivity in the lithium space, but that's not one of my calls because even if, lithium carbonate price comes down to match the performance of spodumene, it's still going to, maybe halve from here. So, no, I'm sort of looking at things like uranium and saying, well, I see a bit of risk at that being at these levels. Long-term off-takers of uranium don't want to be paying these prices. Otherwise, you're long-term underpinning shit fundamentals for a power plant. So, how does all this green energy and sustainable cheap energy work when you're paying that much for uranium? So for uranium to be a thing, I think the price needs to not work. And I know that doesn't happen in commodities. So, I think uranium's got a bit of risk to it. Iron ore as well is one that, it's kind of defying what I think probably reflects the Chinese economic guidance that, maybe guidance is the wrong word, but, the pattern that you get in your head of what Chinese economic growth is likely to be. Iron ore's not playing that game probably as well as things like copper. So I'd see probably most risk in uranium and iron ore.
Wow. Oh, beautiful, Headers.
Thank you very much, mate. That's 3 from 3 iron ore bearish of the fundies we've spoken to so far. So.
Geez, we might have to start talking about it.
Terrific to talk to you, lads. Look forward to meeting you both properly in February, and I hope you have a fantastic Christmas in the meantime as well.
Righto, bloody the carousel continues. This one, short walk from upstairs. Sammy Berridge, welcome.
Thanks to be back.
Merry Christmas, mate.
Yeah, just waiting for the year to be over. Don't feel very merry at the moment.
Oh, right. We'll make you merry after this little 5-minute chat, mate. Number one, speak at this. Now, your most merriest prediction for 2024, the highest conviction bet you got happening or about to make happening.
I reckon probably domestic gas. So a little bit of an obtuse one. But it reminds me a lot of like thermal coal in sort of 2021 where like none of the brokers wanted to upgrade their prices yet, there was clear indication that, the actual price itself was going up and up and up. And Whitehaven's earnings at that point in time were going up and up and up with it. But there was this huge lag before the market actually caught on. And I think that's what's happening in domestic gas at the moment. I mean, contracts are being written at $15 plus and, the analysts have sort of got prices of $11.50, into perpetuity. So I reckon that's there could be a bit of action. I think there will be a bit of action in the domestic gas space next year.
We'll try not to ask too many follow-ups, but I've got a quick one. Is your prediction across entire of Australia? Because, or more focused on west, east?
Oh, I think it's definitely an East Coast thing. Like they've got their own problems over there. I mean, we've got that sort of. I think there's the investigation into the Western Australian sort of natural gas exports on the 22nd of December, and seems word is that they're going to allow some of that gas to be exported. Would certainly be a good thing for those producers, but. Because we've allowed gas exploration in WA over the last 10 years, and so lo and behold, we've got a few discoveries to feed the market, whereas they haven't done that in New South Wales and Victoria, and their current supply is going to run out. So they're short, and I think they're going to end up importing it. Could you believe it or not? Which I think is ridiculous, but anyway, that's what I think is going to happen.
I like it. Next question is your most non-consensus prediction for 2024.
This is a tough one. I think I'm going to go with the switch from inflation to deflation. We've been hearing all about inflation for the last 18 months. It has been rolling over pretty steadily for a while now. And I think by the time we get to sort of April, May next year, the discussion is going to be more around deflation than inflation. And that's got plenty of implications for sort of, central like interest rates around the world, gold prices, and all sorts of other things. But I'd say I'm silly at the moment, but I wouldn't be surprised if that's what we're talking about in the middle of next year.
What about best commodity for 2024?
Yeah, that's again tough to pick, but consistent with that view on inflation and deflation, I'd have to say gold. I think is looking pretty good, even after the run that it's had. sort of ducked back below 2,000 an ounce now, but the reasons for it going, through 2,000 in the first place are still very much in place. And I think that could do something special over the course of calendar 24.
And lastly, worst performing commodity for 2024.
Yeah, even though it's fallen a long way, I think I'm going to have to stay with nickel. I think it is pretty beaten up. There's not many people making money out of it, but the supply coming out of Indonesia is thick and fast, and it is low cost. So I think that's probably going to be in the doldrums for a little while yet.
So it'll just remain a bad performer. Even if it stays flat, it's still underperforming.
Yeah, that's right, in a relative sense.
Can always get worse.
Yeah. Oh, true. And I think, aluminium, I think, is probably due to pop. The other base metals, I think, are reasonably well supported, but, that big wave of supply that's come on in nickel and will continue to come on, I think, is, going to make it pretty tough on a relative basis next year.
Bloody beautiful, mate. Merry Christmas to Perennial from Money and Mine.
Merry Christmas to you two guys, and always a pleasure, and looking forward to chatting further next year.
Bloody efficient stuff.
That was great.
Right, here we go again. Following our dinner with him the other week. That was a bloody good feed. The Cav is in the house. Anthony Kavanagh. How are you, Cobber?
Hey, boys. Good seeing you.
You too, mate. Right, let's rip in. Question number 1 for 2024. What's your high conviction bet? Now, this bloke has high conviction. What is it, Cav?
Oh, I think I have to go with what we were talking about over dinner. And that is the fact that oil and gas, there's going to be industry consolidation. Now, you could say no shit, Sherlock, given Santos and Woodside the other day, so it's definitely going to happen. But I'm saying broader than that. I'm saying you take all the small caps on the ASX, I reckon there's a good chance that a few of them are mopped up. And I'll give you 4, and I'll say I have a high conviction that at least half of those are taken over by the end of the year. And so I would say Strike Energy, Cooper Energy, maybe Carnarvon for Rusty, just to be safe. And I would say Coleridge. I would say out of those 4, I got a high conviction that at least 2 of those get taken over by the end of the year. There's a good chance that a few of them do. And for a bonus point, I'd also say that I think Beach Energy doesn't exist in its current form that it does today, whether they are taken over by someone else or they merge with the demerged Santos' domestic business. I think that Beach will be a very different business in 12 months' time to what it is today.
Mate,
we've just got Kerry Stokes on the line that wants to dial in.
Spoken like a former oil and gas analyst, mate.
I try my best to pump up the sector where I can, mate.
Question number 2, mate. What's your most non-consensus prediction for 2024?
Can I say that lithium's got to bounce, or is that consensus? I mean, it's like so in the.
I think it's been said already as well. Like, yeah. Yeah, because
something else. I go with something else if you need.
Mate, you do you, Cav.
All right. Let's say that I reckon lithium bounces, and I'd say spod gets close to $2,000 a ton. I just think that happens on a 12-month basis. Not necessarily in the first few months. Everyone's telling me the first 6 months for lithium is going to be pretty average in 24, but I do think that if you give it the full 12 months, that we'll see lithium prices back to $2,000 a ton. I'd say back to our discussion that we had, JD, a couple of months ago, I would still say that high conviction contrarian is that exploration expenditure will bounce quite materially in the back end of 24 into 25, and I'm talking 20 to 30% growth rates again, and the market's probably a flat level. So that, let's say I've got 2 contrarian bets, and those are both.
Love it, mate. Next one is, what is the commodity that is going to perform the best over 2024? I guess we'll go something different to what you've just covered there.
No, I can't double down on lithium. And I'd say that gold's a really obvious choice, but I won't go gold either. I actually thought long and hard about this. You want something that is basically volatile, has the ability to be volatile, and you want something that's been kind of in the toilet, so to speak, in the last 12 months. So the one I picked actually kind of as an interrelated exposure to a few different themes that I'm thinking about. And without building up too much suspense, it's the Henry Hub gas price. I'll take you through my thinking. I do think commodity markets remain bifurcated in that there is an East Block and a West Block, and I think Henry Hub and most of the Western world energy fits that bill. It's always back to a 2022 thematic. I think that there was a massive hangover in 2023 for global gas prices off the back of what happened in 2022. Everyone got drunk and basically bought as much gas and whatever else they could. And the storage tanks were basically full in Europe in 2023. So you had this glut of gas. I think that going into 2024 that you could see, whether it's an El Nino created event or whether it's just a normalization of weather patterns, you could see, I guess, a colder winter in Europe and then summer being less mild than what it was in the previous year. And the other thing that's happened from a global perspective is also the fact that China's seen a lot more rain than previously seen. So the hydro levels are actually full in China. And I think I read today that hydropower in China is about 2% of the world's electricity. So if you have less rain in China, they're going to consume a lot more gas, a lot more coal, a lot more uranium. I do think that if Europe starts to struggle for gas because the storage actually gets drained, that they'll be back in the market in a big way for global gas. And I think if you do start to see that, US can be the marginal supplier of LNG globally. You should start to see the Henry Hub price start to reflect kind of an international parity price again. And so it's $2.26 or something today. I think there is potential for the Henry Hub gas price on a 12 to 18 month view to be 200% higher than where it is at the moment. And I think gold could go to 2,500, 3,000, but I do think the highest potential upside is in the Henry Hub gas price out of any commodity I'm looking at the moment.
I think we can deduce that you haven't shot from the hip there, Cav. There's a bit of thought when you come into that. I like it, mate.
I might have been thinking about it last night. Yeah. There's always a bit of hip shooting going on back here, mate.
I like it, mate. Righto, what's the biggest duster for 2024 or commodity that might remain a duster?
Look, I mean, back to the interview I have with JD, I have to double down on the iron ore. I'm surprised that it is $138 today, and it's probably going to be a pretty consensus underperformer, but I just can't see why iron ore is higher than where it is today in 12 months' time, given the state of China and everything that's going on there. If I had to guess, I'd say kind of $90 a tonne for iron ore. But yeah, I don't know. I'm a bit of a commodity bull, so it's hard to actually come up with something that's going to be another form of it. But iron ore just takes the cake for us, just the demographic situation that we're seeing in China. And I guess, the lack of growth or the slowing of growth, I should say. They're still growing at 5%, but the slowing of growth in China.
You're just a lovable guy, Cav. Like, you love commodities, we love you. It's just love everywhere, mate. It's bloody good, mate. Cheers for that.
I love it. What can I say? I love it.
Mate, Merry Christmas from all the money in mine, mate, and thanks for your content this year, and great to catch up with you the other week.
Hey, cheers, Cav.
Thanks, boys. Look forward to sharing more goss and more content next year.
Oh, absolutely, mate.
We won't record that shit, don't worry. That's the best. Cheers,
Merry
Cav.
Christmas, boys.
Love it,
Let's
mate.
do it.
G'day, Warren. Pleasure to have you on Money in Mine again, mate. We'd love to know what is your highest conviction prediction for 2024?
Well, my highest conviction prediction for 24 is the same as it was for 23, and that's uranium. And you might say that's a big call, seeing how it closed last night at over $84 a pound, which is up 72% in 2023. But I'm doubling down and saying we're just getting started, and it's still going to be the best performer in 2024. You might accuse me of talking my own book because
we would do that 100%.
80% of our net asset value now is in uranium. But, I don't see any headwinds. I see a lot of wind at our back, and next gen is just getting started on the ASX. So it's going to be a great 2024.
Love the conviction. Next question, Warren, is what is your most non-consensus prediction for 2024?
Well, consensus sometimes is hard to judge. What is consensus? But, I think it's general consensus that the battery metals theme is a good place to be. And I would suggest that my anti-consensus view is that battery metals in 2024 will not be a great place to be. What do I mean by battery metals? I'm talking nickel, I'm talking lithium, graphite, and to some extent, copper is even caught within the battery metals nomenclature. But I think it's going to be tough for battery metals in 2024. We've still got high interest rates, which I think are going to last for a while. That's going to impede global GDP growth. Things in China are not great. I don't think that EV adoption rates are going to be quite as good as people are expecting. So I think it's going to be wind in your face for battery metals in 24.
And Warren, what about I suppose you already answered the question here. For the best performing commodity, it's uranium. We may as well just skip to the last question then, which is what's the worst performing commodity for 2024 going to be, Warren?
Yeah. My bet would be best performing uranium, as we've already stated, and worst is probably nickel. Nickel has not only got that battery metals headwind in front of it, but GDP growth headwind and ample supply coming out of Indonesia. So I think it's going to be a tough year for nickel.
You're betting that the trend is your friend, and betting that two trends of 2023 continue into 2024 on that front.
Yeah, quite right. You got it. You nailed it. It's not too risky a bet. Trend is my friend.
Well, much appreciated, Warren. Pleasure to speak with you as always, and I hope to catch up with you whenever you make your way to the great city of Perth.
See you soon in Perth, guys.
Thanks, Warren. Cheers. Alrighty, guys. Next up, we have got Dave Franklyn, someone we have interviewed in the past. He runs a couple funds out of Argonaut. Thanks for making the time. Let's rip straight in. I want to hear your highest conviction prediction for 2024.
Yeah, thanks, JD. Look, it's been a difficult year for energy transition. The thematic, which is really the move from to decarbonise and electrify the global economy. What we've seen is EV sales have lagged expectations. There have been project delays, governments struggling to wean themselves off fossil fuels, and commodity prices associated with that thematic taking a tumble. So notwithstanding this, our highest conviction prediction is that energy transition is not dead. We see it as the end of the beginning rather than the beginning of the end. And next phase, I think, is to recognise it's a transition. It's going to be messy and bumpy. It will not happen as quickly as we'd like. It will need to blend economic realities, but ultimately deliver a whole new wave of demand for a small group of commodities. And we think there's a rare investment opportunity.
Beautiful.
What about the most that's probably a bit of a non-consensus prediction in and of itself, but what's your most non-consensus prediction for 2024, Dave?
Yeah, look, everyone's slamming lithium, saying the party's over. I'm looking at consensus numbers recently, and they're kind of dropping to, if you look at spodumene, around $1,400 a tonne now, and going to $1,000 a tonne is becoming sort of the norm and the consensus. We think that's overdone. Notwithstanding EV sales have lagged expectations, there's still a very strong growth rate there. So we think strong demand going forward through 24, chance of supply not coming on as quickly. We think lithium will surprise, and we think in 12 months' time will be higher than where it is today.
I like it, Dave. Maybe we'll put lithium aside for now. What is the best performing commodity for 2024?
Yeah. Look, I think the safe bet is copper, right? Recently, we've seen some supply constraints out of Panama and Anglo. Looks like copper's switching into a deficit in 2024. But having said that, I think our best pick for commodity in 24 is rare earths. NdPr, down almost 40% this year. We think it's due for an upturn in 24, so it's the rare earth market.
Okay.
And to round it out, Dave, what about the worst performing commodity for 2024?
Yeah, Trav, look, iron ore, it's been the standout performer, or one of the standout performers in 23, up about 25% to $135 a tonne. We think as we move into 24, you'll see just the slow China economy impacting on iron ore demand, potentially new production coming on, and we think that it'll be the one that feels the brunt of that and edges back next year.
It's a common selection there, Dave.
Yeah, not the first one to call iron ore down for 2024. Appreciate you making the time, Dave. Great to chat again.
No worries. Thanks for your time. Cheers.
Cheers, mate. Wicked.
Awesome.
Thanks, mate. We'll probably chuck that one up tomorrow.
Okay.
Appreciate you contributing to it, and keep in touch. Have a Merry Christmas and the likes, mate.
Yeah, no, you guys too. You've done a great job there. So well done on the business.
Thank you very much,
Sit back
mate.
with a beer and reflect on what you've seen. That's so good.
Appreciate it, mate. Have a great break.
See you, mate. Bye.
Okay, cheers.
Righto, beautiful. Thanks to all the fundies. Love the work. At least one of the 8 funds are going to be right about something, you'd hope.
I think none of us want them to hold them to account unless they're right.
Yeah.
So, but
we'll reshare this video in a year's time and see,
Yeah.
see how they went.
I might
We
summarise
will
all
not
the
do a
predictions in a single
scorecard.
page and send it around.
I thought it was very. I thought it was very cool to hear. You know, a lot of the different fundies. You know, some of them are picking up on the same themes. Others are, you know, going head to head on some of the picks and predictions that they'd made. So very keen to see how these play out over the next year.
Very good. Now, before the bloody the partnership sign off, get a shirt, everyone. Link in the show notes. Got all the bloody big box of them at home, so I want to get rid of the box. So
Get your kids a gift. Get your grandparents a gift.
mate,
Buy yourself a
they're
gift.
flying out the door. Get in quick because they mightn't be around tomorrow.
Speaking
so.
of gifts, we've got to do our Secret Santas after this.
Oh yeah, we've got a
Yeah.
secret Santa. I've got to go shopping for it. It's a good one.
I'm excited.
Wonder who's got who. Well, I know who I've got.
And
should be
it's our
very
second
good.
last show. Tomorrow is going to be pretty exciting. I'm pumped for tomorrow. So we've got 2 pretty, guests that we haven't had on before, but we're just going to talk pretty candidly about the year that was 2023.
Good. As I said yesterday, a couple of fellas we really respect in the media space. So
Yep,
it's
should
gonna
be a cracker.
Great to have them
Awesome.
on. Righto. Thanks to all the partners always. InvestorHub at the top of the show. Mate, then we've got all our other bloody good mates at DSI Underground, Terra Capital, McMahon Mining Title Services, Future Proof Consulting, Anytime Exploration Services, KCA Site Services, Brooks Airways, and Cadrill. I feel like we've got to do this last bit a bit different.
We'll mix it up in the new year.
Let's come, JD.
And cheers to
This is
Ali.
your area.
And cheers to Ali signing off her last episode of the year.
Signing off for the year. We'll see you guys in
I was thinking,
2024.
fuck, you're not leaving. Jesus Christ, my heart went in my mouth there.
Hoodaroo.
Jesus Christ.
Hoodaroo.
Let's come back, Ali.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.